Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. And last week, as flat as it kind of ended up playing out after the non-hiking of the rates, we have finally started to see a little bit of the seasonal downturn that we expected, tending to put in the low for the year, June or July. And that's not letting us down here this week. But all that to be said, are we yet at the key support levels for you, Miles? Are we excited yet, or are we still anticipating?
I mean, not mine, right? I don't know how long I can go saying 1910, but I'm still on the 1910 bandwagon. Although I do love that each of these subsequent lows we've had over the last couple of weeks will have a big push down interday and then will pop right back up. Yep. So it's obviously trending down, but it's interesting to me to see that there's clearly a number of standing orders that are just sitting there waiting to get filled. You know, you hit 1930, a bunch of orders get filled, but the momentum continues down. You hit 1920, a bunch of orders get filled, but the momentum continues down. So yeah, we're 1935, 1938 while we're recording, but we were quite a bit lower earlier this morning.
Yeah, we got as low as 1918 and a little bit of a mini flash crash, if you will, at the market open. I tell clients a lot of times, we may see these points, but we may not be awake for them. It could happen in the London market. It could happen in the Asian market. But when it happens, it can also happen, like you just described, very brief fashion as orders get filled.
So I still like that 1910. I'm not saying that's the bottom because we're still so far above the moving average, which we're going to look at some moving averages on a couple other charts here as well. We're still so far above it. Your next level down would probably be in the 1860s, which would feel like a pretty significant decline. But you're still talking very, very shallow when you go all the way back to where this started back in October. You're still looking at very shallow numbers. Yeah, I like how gold is reacting. It's completely reasonable summer opportunities that we see every single year. We have the same conversation every year, right? Like if you're saving money throughout the year, you're dollar cost averaging in slowly. You're hopefully putting a little bit of cash aside throughout the year. And once or twice a year, you get a really good opportunity that presents itself. And it's crazy to me how often that's June, July, August, or May, June, July.
That's right. And right now, there's not a whole lot of news that's moving our market. We're seeing gold flat today. We're seeing everything else down. So the only thing that's up today is the U.S. dollar, which we'll get to. But the news is China and Taiwan. The news is China and Cuba. The news is politically centered, you know, whether it's a Biden family or a Trump family issue or something coming out of Washington. Not a whole lot of monetary policy, not a whole lot of economic news that's roiling markets. So gold's flat. Silver's off about 1 3/4% today. Platinum's off about 1 3/4%. Palladium's off about 3%. So we're seeing some declines here, but gold's hanging in there almost like today and this week is a money week, a money day. So with that short-term chart coming in around 1910, the intermediate chart that you showed last week coming in around 1910, anything that's changing your mind that we're going to see it news-wise, anything you're expecting?
Again, I'm still expecting to see us get that other $20-$30 down, and probably a pop from there. You know, now for us to start arguing that that's the reversal point, you're looking at gold having to move up and stay above like 2,000. So we could get a $40, $50 pop just based on normal trading, but then maybe have it continue back down to that level, put in a double bottom this summer, or maybe go a little lower down into the high 1800s. But ultimately, when you look at that medium chart, like you just pointed out, like this is a very shallow retracement. And I think a lot of people need to remember that there are emotional moments that move markets pretty aggressively. And then you have cool-off periods that kind of settle down and find the intermediate price where it would have naturally gone to anyway. I think we're just reverting back to its natural mean, and then we'll hit the fall and things will start moving again. And like you brought up, on top of current economic and political things that seem to be the hot button topics right now, let's not forget we got an election not too far away. And we're going to start seeing that cycle heat up as well.
Yeah, things will definitely start to build. Don't get me wrong. We're not going to get lulled to sleep. And we've been screaming from the rooftops
over the next year, we're not.
No. And it's like, look, buy these opportunities, buy these dips. When we get down to these support levels, this is your opportunity to cost average in because The long-term fundamentals haven't changed. The macro fundamentals have not changed, whether it's debt or spending or interest rates or economic viability or monetary policy, fiscal policy. All of those things are still intact. Geopolitical tensions still intact. All of those are reasons to be buying gold. Then we're looking at the white metals as the value based on where they are relative to the gold. Much like today, when there's a disproportionate drop in the white metals compared to gold, increased value in the white metals, right? And we end up with more gold later because what's happened today is it's further increased the gold to silver ratio, for example, back up to 85-1. So looking at silver, is there anything that you're seeing there from a support standpoint or separation from moving average that's got you feeling one way or the other?
Separation, quite the opposite. In fact, today silver hit the 200-day moving average. So it wasn't surprised to see, again, drop this morning and then a little bit of a bounce today. We're just above the 50% line. When you go back to, the start of the market rise, September, October, that's sitting in the low 22s, like 22.18, 22.20. So maybe we see silver slip a little bit further. One thing I threw on the chart last week is silver's been in this massive rising channel. That right now is sitting down around the 618 fib, 21.25, and is going to continue to rise as time goes out. So I was talking to Kevin earlier, who some of you may know from the weekly commentary show with Dave. I was talking to Kevin earlier, who was speaking with a client of his who follows this stuff pretty closely because the guy owns a bank and is constantly looking at markets when you own a bank. And he was looking at the pricing in silver, and he said, really, it's a timing issue. Like the way the moving average is moving, the way that this trending channel is moving up, we're looking in the low $22 range today, or we're looking at hitting that trending channel in a month or two in the low $22 range.
Yes.
So it really just becomes an issue of timing. Like, could we see silver take a dollar flash crash? Sure, but who cares?
But we're under 23 right now. That's another one of those welcome opportunities. And we were talking about that in my office earlier today as well, with the charts that you have shown both from a short term and an intermediate term, as well as that channel, as well as moving average. That 22.25 to 22.50 sure seems like everything's getting ready to kind of converge at that point.
Mm-hmm.
So what, another 60-cent drop from here? Not a huge move,
yeah,
but certainly something, if we're awake for, take advantage of.
Yeah, that sounds like a normal run-of-the-mill June, July, August.
That's right. Yep.
So platinum, a little bit different. Platinum broke its rising floor today, which I find interesting. We had all this convergence of stuff happening right around 980. You had a trend line, you had the rising floor, you had the moving average, you had the 50% line. So you had a number of things all converging right around 980. I thought we'd see a bigger bounce than we did. It bounced like $10-15 and then it's just blown right past it. So platinum down there in the 950s. I continue to be amazed at platinum. It makes absolutely no sense to me. I'm still buying it. I don't care. I don't care that it doesn't make sense because in the long run, I'm still pretty confident I'm going to be right. I don't know what else to say. I'm just here. There goes my chart. I'm throwing it across the room. I'm not looking at the platinum chart. I'm just going to keep buying more every time the price goes down. I know that's a terrible investment strategy. I apologize. I'm doing it anyway.
Well, let's remind the listener too, though, platinum and gold being on parity is very normal. Platinum is still 50%
right
of the gold price, and it's about 60% of the palladium price.
Right.
And so that screams value right there, but platinum's got a lot of room to go. At one point, it will be the big dog. Do not worry about the one step back. Focus on the 2 steps forward.
Right. Yeah, and it's a good addition to any metals portfolio. I know we've been encouraging, about a 10, maybe 15% of your metals position sit in something like platinum. It's that one home run hitter in your softball lineup. You don't want a bunch of those guys. Yeah,
Are you describing me?
Yep.
Yeah.
Yep, exactly. Who won our game single-handedly last night. Thank you,
not
Tori.
Me.
Company
Mason gets all the
softball
credit.
team.
Yeah.
Mason over at the vaulted side of our company. It's that one guy that's either going to get a home run or strike out. Like, it's nice to have one of those guys in your lineup. The rest of your team should be gold and silver. But to have one guy sitting there that can go do what, say, palladium did,
That's right.
Not a bad idea. So I'm still buying some, chipping away at it. It just, Russia, China, Taiwan, all the issues with import-export and sanctions and so on and so forth. Your discussion a couple weeks ago about global availability and stockpile of platinum, I thought was killer and definitely opened my eyes even further. So I just don't see how it's a miss. I don't get it. I don't care. There's trading stuff going on that's pushing the price down. To me, it's just opportunity. Speaking of opportunity, I wonder if we're going to get some over on the equity side of things. You look at the Dow. I think one of the best things in the world right now is to hold the Dow chart right next to the NASDAQ chart. Boy, those are two different animals.
Yes, step siblings for sure.
So it is amazing to me how one industry is propping up the entirety of the equities market right now.
Well, NASDAQ being so tech heavy, obviously AI being part of that is driving that. And it has the same sense of previous tech bubbles, does it not? What goes up must come down. You talk about a moving average separation in the short term with what has transpired with the NASDAQ and tech stocks. At some point, there's got to be a breather there. But, it can be argued that they were oversold as well. And to me, that's not my area of specialty. I'm looking again at the U.S. dollar. What's the dollar going to do? If the dollar is due for a downturn, then the equities should hang in there a little bit. But it does appear as if all the economic news rolling in, at some point it has to catch up. It has to catch up to the markets. And if the Federal Reserve delays quantitative easing, delays a pivot, delays increasing their balance sheet, then at some point there's going to be a reckoning for these equity markets.
Right. Yeah, and I'm glad you bring up the dollar because, for a while here we've seen the dollar 106, 101, 106, 101. So the assumption is maybe it's going back to 106, but we seem to have died out around 104.
Yep.
And it's coming back down.
Yep.
And that certainly coincides with them not raising interest rates. So we're looking at the dollar. We've been in this range, but it has given up about 50% of the growth that it put up over, about a year and retraced back down. So that's a pretty common sounding retracement. We've talked about that with gold, these 1/3, 1/2, maybe 2/3 retracements when you're in a long-term trend. And maybe the dollar's long-term, 10-year trend is going to continue up. We are talking about the dollar compared to other global currencies. Now, that's not us talking about the dollar as far as your purchasing power goes, because you and I both know things are more expensive today than they were 6 months ago. But if the dollar index is going to continue up over the next 5 or 10 years, it's not going to be to the benefit of the U.S. consumer. It's going to be against other consumers and others nations whose currencies are going down faster than ours is. So sitting here at around that 103-ish range, actually we're down around 102 now. I'm concerned that if we don't see a push back up to the 106, because I've actually been arguing I don't think the dollar's going up over the next 5-10 years. I think the dollar's going down over the next 5-10 years. And if that ends up being the case, a break below 100, I think ends up looking really bad.
I do too. That's kind of indicative of a rollover, if you will. And to me, that's an oversupply of dollars, right? You have a ready supply in that instance where the dollar weakens just because the market just has too much of it. Gold, on the other hand, it'll be worth your while to go to our website and read Morgan Lewis's Hard Assets Insight this week, because he will get into some of the gold availability concerns and how fewer and fewer ounces are being discovered on an annual basis where they're not meeting demand, much like what the platinum discussion was.
Right.
So always keep in mind, they can print more dollars, they can depreciate the dollar, they can drive down the purchasing power. And that's what gold mostly reacts to. That's why gold goes up over our lifetime. It's why I've seen $35 gold and why I've seen $2,035 gold.
Yeah, and we're not quite on the Kardashev scale high enough to start blowing up stars to create more gold. So there is a fixed quantity of that particular element here on the planet. And yeah, Morgan's conversation with us earlier this week. For the listeners, Morgan was on the show here a couple weeks ago. Morgan puts together a very highly researched, very well-researched piece for the company every week on our website. And he did go into a lot of mining and availability in the metals this week. And it was very insightful, I thought, because platinum, Tori, you talked through the platinum thing a couple weeks ago. Morgan's now looking at it from a gold standpoint and the diminished availability of products product while we are simultaneously printing more and more money. And one of my big arguments has always been when you get into a system where you're trading finite goods and resources with an infinite currency, that ain't sustainable.
That's right. And even if you don't see the spot price initially climb, where you'll see it is in premiums. And you and I have gone through that for the last couple of years with silver. Silver has availability and supply issues as well. Premiums are starting to soften a little bit, so that's great for those of you who have waited a little bit. Yes, the spot price is down. On top of that, premiums have softened just a little bit in the summer lull. But keep an eye on all of that because gold, too, will have premium issues. If availability gets pinched, supply and demand pressures kick in, premiums spike even before the spot price may climb as a result of futures market speculation.
And for those of you that have been in the metals market for a long time, you remember when that happened back in 09, 10, and 11, when gold and silver were reacting to the 2008 market crash, and everybody in America was running waiting lists. You want gold? We'll let you know when it comes in. And that's not a great bread line that you want to be standing in. So that's going to do it this week for Golden Rule Radio. Thanks again for joining us. If you liked what you heard, there are YouTube buttons. It's 2023, and you know what to do with them. So you can also swing by our website at McIlvaney.com. And I'd highly encourage you this week, go to the market news section and check out Morgan Lewis's Hard Asset Insights, probably coming out tomorrow on Friday. You can find more info on Facebook. We're at McIlvaney Financial. We're also on Twitter at ICA Gold. Or better yet, if you'd like to discuss your personal precious metals portfolio, check the credit safety rating of your bank, or just have a conversation with a like-minded individual, give Tori, myself, or somebody else here at McIlvaney Precious Metals a call. We can be reached at 800-525-9556. Thanks again for listening. Have a great week.